A very interesting subject we are discussing. Now, I actually have this particular issue to ask you that with what we make, you know, we make so little as a people. And of course, nobody ever makes enough. But to ask everybody to invest is a bit much, isn't it?
No, I don't think it's a bit much. The fact is that I liken investment to a fruit. Okay, when you earn your income from whatever source, it's like you've earned or you've gone to pluck a fruit from a tree. Every fruit has a seed in it. And nature designs things so wonderfully that no matter how small the fruit is, you find seeds or a seed in there. And what it tells you that there's a portion of everything that comes to you that you must invest. So no matter how small your income is, no matter how big it is incumbent on you to invest. So the excuse, and one of the biggest threats to investment are the excuses to investment. You can find several excuses why you don't have to invest. But you must make a philosophical commitment to invest. And that is what all of us must understand. In the Western world, everybody understands that to secure your financial future, you have to invest. And you can't live a life of consumption. And unfortunately, in Ghana, and for most parts of Africa, that's our practice.
People are making 60 Ghana cedis a month, yes. 80 Ghana cedis a month, 100 up to 350, say, for the average salaries. How do you expect somebody who's making that much, who's definitely would have had a family, you know, they have bills to pay, there's electricity, there's water, possibly school fees, you know, rent, all of that. How do you expect them to still have some leftover to have to invest? Yes. How can we do that? And what sorts of investment packages are available for us to be able to do that? Depending on what income you're earning.
The interesting thing is that statistics has shown, research has shown that if your investment, your income varies by 10%, that's either it falls or drops, it rises or drops by 10%, you don't experience any significant change in your living pattern. You probably have to adjust your consumption expenditure pattern slightly and you'll be on the same benefit curve. Now, the lesson here is that for every income level, there is an amount you have to invest. Once you're able to pay your electricity bills, water bills, you will need to see investment as part of such commitments you have to do. Because if you want to live a life of comfort in the future, it is incumbent on you, especially those who earn in very small incomes, to start investing. Investment is critical to those who earn low incomes. More critical to them than for those who are earning high incomes, because you have the responsibility to lift yourself out of poverty. That's interesting, but the perception has been that those who are earning more can actually or do actually have the opportunity to invest. But whilst we're talking about investment, let's define it. What is it?
It's investments is just making your money work for you. Deferring a certain consumption today so your money can work for you in the future. Okay, so if you want a better life, basically if you want to improve your lifestyle as it is now, let's say today you rent one room, okay, you have you share a bathroom with others. In the future you want to have your own house, or you want to have three rooms to rent. Okay, you're in school now, in the university, you desire to finish the university and start your own job, okay, or you are working as a factory worker right now, your salary is 30 cedis, and you desire to upgrade and make more money in the future so you can better your lifestyle, then you have to put some money aside so that you can achieve that goal that you want in the future. Let me also add that it's interesting, people complain that I'm earning so little that I can't invest. See, that's the first let me say, principle that you have built that will work against you. And indeed, if we will be honest with ourselves, I mean, the average worker would find that by the second week of the month, they really don't have anything left. See, I think it comes down to discipline. Money for transport to work can come. It will interest you to know that so many people that work in the markets, I'm sure you've heard of Susu. The Susu collectors go around, and those who are disciplined enough will deposit 50 Peswa coins, 1 CD notes in those boxes. Okay, they can do this for 3 months or 6 months. They gather some capital and then they put it into some kind of business. So what excuse do you have if you say, I earn 60 or I earn 350 and so I can't invest? You realize that people who earn a CD a day are saving 50 pesos and then tightening up their consumption so that they can have a better life in the future. So there's no excuse at all. Everybody can invest.
Interesting. Let's take a look at the investment opportunities available currently, and let's looking at the different range of salaries, you know, available from the very little. So let's say the average of 350 Ghana cedis a month.
The interesting thing is, before I even come to address that issue, one of the greatest examples you can find in Ghana about those who are conscious of investment are farmers. And I always say this: every farmer reserves the best portion of his harvest as seed for planting in the next planting season. Can you imagine what will happen to Ghana if all farmers decide to eat their crop? No matter how bad the harvest is, a farmer keeps a certain portion of his yield as seed for the next season. Now, coming to the question you just asked about the investment opportunities, the problem we have in Ghana, and it is always said that for lack of knowledge, the people perish. There are investment vehicles that take as low as 5 cedis, 20 Ghana cedis. For instance, and I will cite the investment vehicle we have in First Bank, mutual fund. And the mutual fund is simply a collective investment instrument that pulls contributions, no matter how small they are, from various people. And by pulling those resources, you get so much money that gives you, the fund manager, the wherewithal to command a lot of returns for such kind of investment. First Fund, which was adjudged the very best money market mutual fund in Ghana in 2010, all you need to do is to start with 20 Ghana cedis, for instance. And you can top up with 5 cedis. We have investors in First Fund who gather coins. There's little 10 cedis, 20 cedis, they put them together, and that amounts to some money. 5 cedis, 10 cedis, they bring it to our bank and they invest. And for our investment client portfolio or profile, those are the kinds of investors who are making lots of money: market women, traders, everybody. So it is, there's no big thing about investments.
I find it interesting because, like you're saying, you know, sometimes the reason is why perhaps people may not want to invest. Would be that they find that they don't make a lot of yield. They don't get enough good returns on the investments they make. So if I'm investing 20 Ghana cedis and perhaps adding 5 cedis a month over a period of 2 years, I mean, what is the possibility that I'll even earn a third of what I've invested over the period?
Okay, the good thing about somebody who has even invested is that he's better off than somebody who's consumed his money. So the returns would be a matter for you to decide on. Once you make a decision to invest,
in that case, then the savings account is there. Well, I mean, if I'm just to keep the money with you.
Yeah, from an investment standpoint and as an investment banker, I tell you what, putting your money, and most of my colleagues in the commercial bank would not be happy with what I'm going to say. Putting your money into savings, it doesn't even give you treasury bill rate returns. The safest return you can get is the risk-free rate, which is the treasury bill rate. So when you put your money in a savings account, you are not even preserving the capital, as it were. So you need to take it a step higher to find an investment vehicle that gives you above treasury bill rates, at least, and provide the risk premium for investing. You know, there are so many investment schemes in Ghana doing very well, fantastically well. The only thing is that as Ghanaians, we are lethargic. We don't want to put money somewhere to invest. If you don't risk, you don't gain anything. You understand? So it is critical for everybody to understand that no matter how small you earn, nature makes it incumbent on you to invest so that at least you live a comfortable life tomorrow. You don't have anybody to blame for your woes of the future if you don't start investing now.
What about the social security? Would we call it a form of investment? But we'll come back to mainstream investment as we want to exhibit tonight.
Yes, it is a form of investment. Okay, you are planning for when you retire. So when you work, you've worked for 20, 30 years, you're 60 years, you're saving, you're putting money aside and investing for the time when you'll not be strong enough to work anymore. So you would have invested your money so that you can have a better life when you retire. So yes, you can consider that as a form of investment.
Okay. How can one prepare an investment plan? Can I on my own sit and say, this is what I want to do? and therefore I must seek an expert, or I go to an expert to give me a plan? How does it work?
Well, it's very easy. I mean, so many people have investment plans. They don't even know that it's an investment plan. First of all, you as an individual, what are your goals? What is your objective? Why do you need to set money aside? Some of them are very basic, right? You need to buy a car. You need to further your education. You need to be sure that you have enough money to pay your children's school fees. Okay, you need to build a house. You need to get capital to put in a business. These are various investment objectives that individuals may have. So that's the very first thing. You have a goal. You have an objective. Once you have an objective, then you start looking at how do I reach that goal? And then let's say the capital that you desire to start your business is 200 cedis, 500 cedis, 1,000 cedis. How do you set about reaching that 1,000 cedis? So that is the plan that you need to set up. You don't need anybody to tell you this. You know how much you earn. You know exactly how much you earn. You know how much you spend. Okay, first of all, you must try to spend less than you earn. Okay, if you start spending less than you earn, then you know that you have started making a saving.
Now that's the bit that sets me pulling my hair, because we'll tell you that we don't make enough.
Yeah, you don't.
Again, we don't make enough. So how do you expect me to spend less, you know, when I don't even make enough?
Okay, I'm sure when I sit down with you and we go through your numbers. But are there some rules that can
help us to actually hold back some money, even though we're not making enough as we normally aren't, really?
Yeah. There's a rule which says you should pay yourself first.
Yes.
Pay yourself first. I always use this example. Otherwise, you become like a pipe. Okay, so the money that comes to you is not for you. It belongs to hairdressers. It belongs to the boutique owners, taxi drivers, the bar owners. Otherwise, when the money comes to you, your salary hits your account at the end of the month. It goes to all these people. Nothing stays with you. So you are just a pipe. Money flows through you. Okay, but if you pay yourself first, so immediately your salary lands into your account, whether it's 10%, whether it's 20%, it goes into some investment plan that you have. Okay, whether it's going into shares, or it's going into a fixed deposit, or it's going into any investment plan that you have.
Okay, speaking
that
of
money
plans
stays
again,
with you.
Again, I want to take you back on the plan thing. How do I set off? You explained that I know how much I earn, and therefore I will put some aside. But how do I go about coming to a conclusion that okay, this is how much I will set aside? What are the key issues to look at, or the basic things to look at that will guide me there?
Okay, I usually don't like to give the rules and conditions. I say look at your own personal expenditure. I say start by tracking your own income and expenditure. Start by tracking it. So in the last week and in the last month, how much money have you spent? And what did you spend it on? Just start by doing that. That's the easiest way to start to be able to understand your finances better. How much do you earn? It will surprise you that some people don't even know how much they earn. Right? They don't know how much hits their account at the end of every month. They have a fair idea. Right? They don't know how much they earn at the end of the month. But start by knowing, okay, I earn 500
They must be rich
cedis.
if they don't know.
No, believe me, some don't know. They say I earn around 300 cedis.
Yeah. That's a way of not telling you how much they're earning.
Oh, no? Believe me, some people don't know.
Interesting.
I have seen lots of people who don't know.
Interesting.
But if you know how much you earn and you know how much you spend, at least for a month, then you know that going into the next month, this is how much I spend on clothes, this is how much I spend on food, and this is how much I spend on airtime, for example. That's usually the first one that you can cut down. Right? For the women, the boutiques and the other things. So if you know how much, but that's the reality. If you know how much you earn and how much you spend, then you can begin to start, cutting down on your expenditure, and then you can begin to start putting that money that you have saved into an investment. So you have to know yourself first and understand how much you earn and spend. Then you can start planning. So that's what I'd say is the first rule. Know yourself first.
Okay. Anything else we would want to add on whilst we're setting off with our investment plan?
Yeah. I think that point is very important. And I would not want to be picking on women, but you realize that in Ghana, when there are funerals, women will always find a new cloth for a funeral function. I ask myself, if you were to put your expenditure to paper, write them down, you'll be awestruck by the frivolous nature of expenditure you make. Now, that is the first step, as my colleague said, to discovering yourself. That you need to understand yourself, what kind of expenditure personality you are. Are you somebody who just spends because he has money available? Now, when you're able to rein in your expenditure, you're able to take absolute control of yourself, and that is a key point. But what I've always said is that, first of all, you must make a conscious commitment that you would want to invest. You see, it is like saying that I would have to eat. It is like telling yourself that I have to be successful. How do I do it? Now, when you want to be successful in life, then you have to tell yourself, okay, how do I get to do it? How I get to do it is that I must commit myself to investing, putting away some money today to assure a comfortable future for me tomorrow. Then you begin to audit your expenditure, as he rightly said. Outline exactly what you spend, and you know that these are things that are nice to have. These are things that are need to have. You take away the nice to have, because that would not assure you of any disciplined expenditure lifestyles. Then what you need to then do is to set clearly your objective. Your objectives will define exactly your expenditure patterns as well. You have to tell yourself, okay, at this stage,
that is if you want that, whatever it is,
yes,
bad enough.
And what I advise people is that just take a pen and a piece of paper, write down exactly what you want to do. Okay, I want to build a house, I want to buy a car, I want to educate myself, I want to marry. That's number one. Number two, try and put an estimate on the amount involved, money that will be involved in achieving those things in the future.
Right.
It may not be right, but it gives you a fair idea, because as you begin to invest, you would change your investment pattern to suit that objective. Then when you do that, you seriously need to put yourself to the test. Tell yourself that, when am I going to get there? Timeline is very important. If you have an objective, you have a target, you don't have timelines to it, you might as well be living in cuckoo's land, because you aren't going to achieve anything without timeline. So tell yourself, in 10 years, I want to do this. In 10 years, I want to do that. So you would have met 3 core objectives or core principles of setting objectives. Identifying where you want to go, identify how to coach you to get there, and then giving yourself timeline. That's key.
Would it be unrealistic for someone who's earning, say, 500 Ghana cedis a month to make a projection that in the next 5 years, I want to own a piece of land? And I don't want it in the city or in a very, developed area, because I know I can't afford it.
Yeah.
But a bit way off, semi-urban areas, and it's 22,000 now.
Yeah.
Like the likelihood that in 5 years it might hit 40 or 40 plus.
40 plus.
Can I say that if I were to put away 50 Ghana cedis, I may be able to reach that objective in 5 years, depending on the investment vehicles that you mentioned available?
Yeah.
Is that feasible?
It's feasible. It's feasible. But the point is that once you do that calculation and you realize there's an investment gap, that's to say that there's a need to do some investment to top up your current savings in order to get to that point, then you ask yourself, how am I using my time? In Ghana, we have tremendous idle time. We spend it doing so many things.
I want to focus on saving.
Yes.
Having not so much to save, but you have an objective that might be a little bit way out of your reach. But it's the basic objective to acquire land.
It's not very basic.
Huge an objective to want to achieve, right? So let's take a look at how we will get there. And then of course we'll look at how you can actually top up. But with what money I have, assuming I don't have time to invest, to make more money, to top up what I'm currently investing, what are the opportunities available? Can you make such a projection? Because I want it to be real enough for us to know we can actually achieve this, that you're not just telling us that we should dream big.
No. If you're setting aside
50 Ghana cedis a month, projection of 5 years.
5 years.
I want to own a piece of land, which might go maybe for like 4,000.
So you have 600 cedis a year. You have 600 cedis a year, and a plot of land is 2,000.
2,000.
No, 4,000.
That's very easily achievable. Even now, you see all sorts of companies, I don't want to mention names, who are selling land and allowing you to pay over a period of time. Aside that, if you earn an income, you should know what is the level of, what's the amount of money that I can let go. I mean, the law says you can borrow up to about 40% that can be deducted from your salary every month. So you can do that calculation. So of the 500, I can take 40% out of my salary to service a certain loan that I can take every year. And loans are not necessarily bad. If you take a loan and you're using 40% to service the loan, it's fine. If you've used the money to buy an asset, let's say you bought land for 4,000 and you are servicing the loan, that land is also appreciating. okay, in value.
We're looking at investment, and I
Yes.
take a loan. I have to pay interest on the loan.
Yes.
I mean, I'm investing in your vehicle.
Yeah.
I'm earning so much.
Yeah.
I may even be paying more interest on the loan I'm taking than what I'm earning from the investment.
Yeah.
Possible?
No.
Okay.
If you are paying interest on a loan,
Okay.
which is more than what return you are getting on the investment, then there's a mismatch.
Yeah.
Right.
That is a wrong investment.
Yeah.
Right.
You must always invest to get a real return, a positive return, as in how much you're spending. You first of all, you must stay ahead of inflation, which is the rate at which prices generally are going up. Secondly, if you have borrowed to invest, then the return must cover, okay, the interest rate that you have borrowed the money at. These are two things that you must look at. And if you are borrowing money, you must make sure that the money is going into something which is yielding you a return. Otherwise, you are creating a liability. So you are borrowing to buy assets.
You know, making sure that the interest on the loan you're paying, the investment you're making, you're yielding more than the interest that you're paying. If you should have to get a loan of sorts.
So you have borrowed money, and you're paying maybe these days bank rates are around 25% per annum. Okay, you must make sure that you are investing in a product which is earning you far more than 25% per annum. So if your investment is giving you 35%, at least then you have a real return of 10%. But if you borrow at 25 and your investment is giving you 20, you're actually losing 5%.
So you're better off not borrowing.
Exactly. And if inflation is about 8.5% and you are investing, you should make sure that whatever investment you're putting your money into is giving you more than the 8.5%.
Okay, interesting scenario. Where are the investment vehicles that can give me the opportunity to do just as you've described?
Okay, so investment vehicles, there are many. You can start from the very basic investment that almost everybody knows, which are treasury bills. These are risk-free investments, borrowings by the government. Okay, you go to any bank or most financial institutions and you can buy a treasury bill.
Do you not need a chunk of money to be able to do that?
To be able to invest? No. With 50 CDs, you can invest in the treasury bill. Okay, so any financial institution, you can just walk in and buy your treasury bill. And you have 91-day, 182-day, 1 year notes. And it starts from these days from about 10% to 13%. You should be able to get a return on your investments. Okay.
Nice.
From there, then you have the fixed deposits. All the banks and some financial institutions have fixed deposits. These are all money market, instruments that you can put your money in. Some a little riskier would give you maybe 13 to about 16%, depending on which institution you are investing in. So for those who are a little bit risk averse, they can put their money into these short-term money market instruments. Of course, there are longer-term investments too that you can make. Frank has already mentioned mutual funds, because there's the capital markets. You have mutual funds there. You can invest directly into shares, okay, and bonds. With the mutual funds, you can either put your money in a money markets mutual fund, you can put it in an equity fund, or a mixed fund. So there are a myriad of investment opportunities available to individuals that want to, are looking for a good return.
Let's take a look at the risk profile and how to opt out of it, possibly. See, my hands are like this. I'm cringing because I'm cringing because it's really scary.
Okay, the thing about risk profile is it differs from one person to the other. Everybody has a risk appetite. Now, generally, and we've said so many things on the table here, and you may not be probably investment savvy, and the best opportunity available for you.
What do you
is
mean,
that
I may not be too knowledgeable about where to invest and
how to invest?
Okay.
The issue is that unfortunately most of us in Ghana don't make the conscious effort to learn about investments and investment opportunities. If you can approach any investment advisor, whatever your situation. What we do is that we first of all assess several factors. One of them is your risk profile. Everybody would need to know whether you are risk averse or you are risk loving. If you are risk averse, you want to be called a conservative investor, somebody who wants that at least he wants always his capital to be preserved, maybe make some small current incomes, and then maybe look forward to capital appreciation.
They're not a gambler.
There's a difference between gambling and investment, and I want to somebody who is risk loving is not necessarily a gambler.
Oh, you say they're gambling with their money.
gambling means that you're putting your money or resources into any activity with an uncertain return,
right,
with so much risk, you can lose totally. The factors that determine the outcome, lottery for instance, call it gambling, because you aren't sure of what you get. The lottery authority can guarantee you that we putting your 2 cedis in there, at the end of the day you are getting 20 cedis. If the numbers don't turn out in your favor, you've lost it. Okay, there's a thin line though between speculative investment and gambling. Those technical things are out there, but the point I'm trying to put across is that,
but I might want to push you a bit further.
Yeah, push me.
Yeah, because when you look at high risk profiles,
Yeah.
you know, depending on what vehicles are available,
Exactly.
and you cannot guarantee that you would have your money, all your money intact, depending on what investment it was put in.
Yeah.
There's a likelihood that you may lose all your money.
Yeah, that's why wise investing makes the point that you don't put all your eggs in one basket, and your risk potential, your appetite for risks differs from age to age. If you are in your 30s or maybe early 40s, you can say that, okay, you have about 20 to 30 years more to retirement. At least if you invest, say, in the stock market, which is a bit risky, you may have about 10 years to recover from any dip. Because the stock market, the long-term investments are the investment vehicles that give the highest of returns. And traditionally, if you want to think investment, you have to think long. If you're thinking short-term, then it means that you're looking for an investment vehicle that gives you some periodic income, somebody who's probably gone on retirement. Such a person will not want to go into risky investment. So you classify such a person as somebody who is risk averse. Now, somebody whose expenditure, whose bills doesn't get paid by the returns he makes on investment, like somebody who's in his 30s, he's earning his salary, he feels he wants to invest X amount into treasury bills, will not worry so much about the volatility in his investment vehicle, because he knows that in the long run he would.
If you can break it down for us.
Okay, volatility means that, like on the stock exchange, if you invest, last year a lot of the stocks on the Ghana stock exchange did very badly. Even at present, we are doing around negative 0.3. Even though some stocks are doing well, like Total and the others. What it means is that you can buy a stock today, say at 10 cedis, and tomorrow it will drop significantly. But if you are an investor worth the sort, you will not panic, because you would know that that stock has the potential of rising up and then probably doing 300 times what you have. So that's what's called the volatility.
The rate at which it goes up and down,
comes down.
Sort of thing.
If you don't have the heart for that, then you probably will put your money into a very comfortable and conservative investment vehicle like a mutual fund, which is generally, apart from the equity mutual funds, which of course also do have some volatility in there, money market mutual funds will normally not lead to capital depreciation.
Okay, can you explain the variations for us? You know, you mentioned the stock market, you mentioned the mutual fund. You know, let's take a look at the distinctions. Yeah.
Okay, in the mutual funds, again, it's for conservative investment, as I said. You are saying that, okay, I do not have the time and expertise to probably monitor the performance of the stock exchange, or I do not have the risk appetite to take so much risk on the stock exchange. So what the mutual fund does is that it takes money from you and I call it me and you investment. It pulls that funds together, and a professional fund manager sits there and actively manages the investment vehicles into which the funds will be put into. So like the old adage, you don't put all your eggs in one basket. The portfolio manager won't put all investment into stock, especially if it is not a balanced fund. If it is a money market fund, of course, he would shy away totally from stock. He will put the funds or the money into investment vehicles of different risk profile that would make sure that it evens out everybody's risk potential. Okay. At the end of it all, you will not lose your money. You make some returns. The only thing is that when the guy who is invested on the stock market begins to make the high returns, you will not compare with him, because he's taking a lot more risk and you have.
Okay. But as a mutual fund investor, can I pull out whenever I want?
Yeah, you can pull out, especially when it's an open.
Do I get interest on my money?
It's an open-ended, and the mutual funds, again, we tend to use the actual term for mutual funds is returns, not necessarily, because the fund manager invests in several vehicles Others don't really yield interest.
Right.
Like if you invest in the stock market, you use capital gains and other things. So we call it returns. You would get your returns plus your principal at any time, especially when it's an open-ended mutual fund, like First Fund. I mean, the only thing we advise investors who invest in First Fund is that at least leave your money in there for 3 months. Then you realize the real benefits in there. And we have people who operate First Fund more like their savings account. You can come in anytime, take it away.
That's
it
right.
gives you a higher benefit by way of returns than you would find in any savings instrument in Ghana. Even outperforms the treasury bill. So it's the whole issue about investment is that it is not cast in stone. It is not rocket science. If you think that you find difficulty appreciating investment, contact an investment advisor for a very minimal fee. And I tell you what, most often when people are doing the investment, they ask you, okay, how much are you making on it as a professional fund manager? You are not looking at what you are gaining as an investor. You are looking at what the person who is investing your money for is gaining. If you don't invest, of course, maybe the fund manager doesn't get that portion of the investment that he makes for you. But you also lose out. Because all funds or all investments, the fund manager or the investor or the investment advisor takes a very small percentage. The real returns to the investor or the portfolio manager or the investment advisor is the number of investments he has. So it's a matter of volume instead of one single individual.
Okay. Let Mr. Tete pick up on the stock market exchange. Stock exchange market, right? Yeah, that's right.
Yeah, so the Ghana Stock Exchange has about 34 companies, and you can invest in any of these companies. In 2008, the Ghana Stock Exchange was the best performing stock market in the entire world. We have seen years where the Ghana Stock Exchange has delivered.
Is that for real?
That is for real. That is for real. We have seen years in times past when the Ghana Stock Exchange has delivered 144% return to investors in particular years. In recent times, we've seen 58%, and we've seen a dip of 48%. Okay, so you have the fluctuations that take place on the stock market, but historically, stock market investments are the ones that give you the most return over a long-term period. Okay, so if you are an investor or you have a long-term profile, investment profile, the stock market is usually the best for you. But the stock market is risky. So you need to be guided. You need to be helped along the way when you are going to invest on the stock market.
Even before you go into the details, briefly tell me, the Ghana exchange market, the stock exchange, right? Do they invest in products in Ghana or without? Okay. Would that have contributed to doing so well on the world market?
Okay, so let me take you one step back. If you have a company, let's say multimedia, and we would love to have multimedia on the market. So your multimedia would say,
are you making a pitch? Is that a sales
why
pitch?
not?
I tell my bosses.
So I'd say a multimedia would say we need more money to expand. Okay, or we need to take our products across the West African region. We need money.
All right.
The stock market gives you the opportunity to raise capital.
Right.
So you open up and say more investors should come in and become shareholders of multimedia. Joint owners of multimedia should be on the stock exchange.
Exactly, you made a big pitch.
Yes, so I'm saying if multimedia needs capital to fund its expansion, it will invite make an offer to the general public that we are selling shares in multimedia. So put your money in multimedia. So people come in and put their money in multimedia, and multimedia then gets listed on the stock exchange. I'm
certain that would be a worthwhile investment. I'm very certain of that.
So on the stock exchange, so shareholders who bought shares in multimedia may want to exit at some point in time. Other people will look at the company and say, hey, this company is doing well, let me go buy. So shareholders trade amongst themselves on the secondary market on the Ghana Stock Exchange. So when multimedia does very well, its performance is good, it makes profits, it's paying out dividends, more and more people will be buying, and the share price of multimedia may appreciate because business is booming. On the reverse is also true. If business is not so good, and the share price could drop. So people buy and sell based on what multimedia is doing, how well multimedia is doing. So there are about 36 of these companies listed on the stock exchange. Yes, local companies. Yeah. Of course, we have foreign lists like Tallow Oil, based listed in London, but also listed on the Ghana Stock Exchange. Guinness, Unilever, Cowbank, different companies listed. So people then look at the company, say Guinness, Ghana Breweries, and say, hey, I drink a lot of Guinness. I think they might be making a lot of profits. So let me put my money in this company. So when the company does well and it's, the share price is going up, you make a capital gain. If it's paying out dividend out of its profits, you get your share of the profits, which is your dividend.
Okay.
Yes.
Somebody's taking a hit at you, and let me share your text messages with you. Slimkin says, I think your guests are talking more technical. The reality is, for how long will I be able to invest 100 Ghana cedis? As a 100 Ghana cedis earner, if I'm able to save 1 Ghana cedis a day to get 1,500 Ghana cedis for rent alone, I think mathematically it works in reality than not, basically. I don't know if he's making sense here.
Maybe he looks at.
He makes 100 Ghana cedis and would want to earn save 1 Ghana cedi a day to get 1,500 Ghana cedis for rent at a point.
Yes, he wants to save 100 cedis and he wants to make 1,500. Yes.
He wants to make 1,500 and he wants to save 1 Ghana cedi a day to reach that goal or that objective as you spoke about. He says that works better than all the things
I would have loved to ask him, why do you earn 100 cedis? Okay, and you want to save what? 30, you want to save 30 cedis.
1 Ghana cedis.
Well, he's saving 1 cedi.
Yeah, so that's 30 cedis.
So he's saving about 30 cedis. Yeah. That's 30% of his income.
That's too much money.
No, that is significant. It's not too much. Yes.
So that's too much. I mean, 30 Ghana cedis out of 70, and I'm sure he has. I wish we would be talking to you, Slim. I'm sure he has other expenses that he makes at the end of the month.
Yes, but he's saying he will be able to save a cedi a day. He will be able to save a cedi a day.
The reality is, he asked a question: how long can he keep this up?
Okay, he wants to. First of all, he wants to rent for 1,500. I mean, I don't mean to antagonize Slim too much, but let's think about it. If you need to find rent for 1,500, yes, he puts himself out here. Why not go for rent of 800?
Exactly. Yeah.
How about 600 or 500? Because there are available options. Okay, so if you are not there yet, take your time.
Okay.
Right, take your time. Start from somewhere. Get rent for 500. Improve yourself. Expand your income. Then go for 1,500.
Right. Let's take a look at what Anita says. Anita Sam says, I feel sick anytime I get broke, and I do my best to save some money. It's not easy, though. I think I'm going to learn something from you tonight. Wonderful, Anita. We're happy to hear that. Hopefully, it will be really useful to you. Let's take a look at, I think, one more. I've got one more text message. Unfortunately, yes. Isaiah Rakisi says, I have gone through such a situation for the past years. When I passed out from training, but I have had to adopt the saving habit, and it's working for me. You know, he's had a hard time saving, and he's actually overcome it, and he's saving, and it's working for him. Okay, so make it work for all of us.
Yeah, that's a very. I like what he's trying to say. See, all that we can talk about all the things here, the theories and everything that people need to know, but it comes down to discipline. Okay, I always ask whenever I talk to people, how many of you want to get rich? And you see all the hands up. How many of you are planning to get rich? Then they start wondering, what does he really mean? You know? Because everybody wants to get wealthy, but very few people are planning to get wealthy.
By magic.
People are hoping that they would get some job which will give them $10,000 a month, and they are waiting for the lucky day. It doesn't work that way. You need to plan in order to be wealthy. Unfortunately, not everybody will be able to get wealthy, only because not everybody wants to plan. Right. But if you just start planning and say, hey, this is the day I'm turning my life around. This is the day I'm going to start investing, not saving. This is the day I'm going to start investing. Then you've opened the door, to being wealthy.
Right.
So it just comes down to discipline. If you really want it, and you want it that bad, you start it.
Okay. Mr. Gamade, you might want to explain to us the third vehicle. I think that was buying the treasury bill as the third option of investment.
Investment, okay. Yeah, treasury bill is part of the money market instruments you can have. Yeah, so if you want to be a very conservative investor, you can buy treasury bills. That means that you are investing in a risk-free instrument, essentially. So, but there's a lot more you can earn by investing in other vehicles that gives you much more than the investment in the treasury bills. You understand? You see, and again... and
what are these others?
Yeah, you have fixed income instruments. You can have fixed deposits. You can have mutual funds, which again, I make that point because there are a lot of stories people are telling about investing in mutual funds, like First Fund. It is there are several means of. One of the difficulties people find is that putting away money to invest is difficult. For some, it's like pulling a hair out of their nostrils. But the almost painless method or way you can do that is to get a standing order on your accounts.
Right.
Okay. When it doesn't get into your pocket, you don't spend it.
Oh no, banks are funny with that. You place a standing order and they never get it right. So tell your fellow bankers.
Oh, they
never get it right. They either take too much, or 1 month they do, the next month they don't.
It depends on which bank, and I'm telling you what.
It depends on which.
And I've heard stories from almost everybody.
In Ghana, we don't.
With deference to my
in Ghana, we don't like insisting on the right thing.
Right.
You understand? We like complaining to ourselves. Somebody is not doing you good service. You have every right to complain and move out of that bank.
Right.
Is once we begin to assert our rights in Ghana and tell the service provider that you aren't have serving me well, for that matter, I'm moving my money from here. You see everybody working. So let's make sure that we get everybody on their toes and working. If you've placed a standing order on your account and your bankers are not effecting it appropriately in the right time, you have every right to complain. Write to them. If they still persist, you just move your money from there. You have banks that will provide you better services.
Okay, so where would the standing orders lead us?
The standing orders will lead you to money being transferred from your monthly salary, if you're on monthly salary, to an investment vehicle for you. You understand? So all you need to do is that consistently, like we do for First Fund. I keep citing First Fund because we have a wide range of people, right from the market women, and I'm not by any means trying to be condescending. I'm just trying.
But they are what they are.
They are what they are. People who get the very small little coins right to the very top. You understand? And we've advised such people to be making periodic contributions, and those contributions are deducted from source. Some of them would say, I can't make the contribution. We've provided them with some small saving box. Put the coins in the box. If it's 20 pesos, 10 pesos, put it inside. At the end of a week or two, bring it to the bank, and we have customers who do that. We count the coins and we invest for you. And a lot of them are very happy. It is a habit. Investment is a conscious effort, and you must be purposeful about it. You must
That's
decide
an adult piggy bank, right?
Yeah, you must decide that you have to do it, because your destiny rests in your hands. And I'm telling everybody that the income you earn has the power to transform your future. It is for you to make sure that you activate that power in your income by saving and investing appropriately. Seek advice. And there are a lot of investment advisors in Ghana. First Bank is among them, a lot of them. And they will give you perfect advice for a small fee. If you think the advice they give you is not good enough,
the hidden
you can
conditions.
shift
The hidden conditions.
If you come to Cal Brokers, our advice is free. Advice is free.
Okay, we might want to wonder about free advice there.
No.
It's free. I mean,
it's what you buy.
It's
when
free and
we
detailed
earn
and
a commission.
adequate.
But you see, we operate a very simple philosophy.
Yeah.
If you make money for your clients, then you make money too. If
For
we don't
ourselves.
make money for you, we don't make anything.
yes.
It's a very simple philosophy that we operate.
Yeah.
Right.
So we will help you make money, and then when you make money, then we make money too.
Yeah.
Because if you don't make money, we don't make anything.
Yeah.
But we've spoken a lot about the traditional ways of investment,
That's right.
fixed deposits. There are so many other non-traditional ways too, for people who want to take a little bit more risk.
Yeah.
And those are the ones we want to share on this platform. So if you can let us
yes,
know.
of course. You have other people that have their own business ideas, have investments. You can take a chance on
You
them
mean
as
I
well.
can bring a business proposal to you and have you pitch for me so that people invest in it like that?
Exactly.
Interesting.
Yes.
How does that happen?
Yes. So if we are brokers. Okay, my job is a broker. You have an idea, you have a little company that you want to turn around. You feel that maybe a boost of capital is all you need. You can't find the capital. You come to us, we look at the company, we help you structure it, and we talk privately to people who want to put money, in that company. So there are all these avenues also available.
Okay.
I advise people as well to become entrepreneurial too.
Yeah.
Okay.
All right, we'll hit that. But let me share some of the text messages that I have received. Very good topic, says Jen Chiwatalu. I hope I got the Chiwatalu. She says, very good topic and well discussed. I think I have learned something. Awal Ahmed says, I have come to realize that no matter how much you earn, you will still become broke unless you deliberately make a habit of saving.
Exactly.
Great topic. Thank you very much. Thanks for the great work you're doing. That's from Tony King Asafo. And Rahina Sedi says, how can someone who earns 100 Ghana cedis rent a house, pay bills, etc., save money for the future? I think they've answered that. You might want to remind Anita, Rahina, if she missed that out on that one. And Gideon Ochodaku says, I'm feeling broke and it's very painful. Sometimes you may even feel rejected. But I think making an investment can help salvage some situations. But what is the best way of investing? I think you've highlighted that. Yeah. And if you missed it, I will let you go very quickly because we have very little time left. And Ishaq Abdullah says, plant a tree today, tomorrow it will return you much more than you invested. Okay, good advice there. Thank you very much. And I think that will be all. Yeah, that'll be all for now. So quickly, you know, they've raised two issues. Yeah. Again, how do you save money when you're earning 100 Ghana cedis? Can you remind us of that again quickly?
I think the point we made here is that, first of all, you need to take an audit of your expenditure. It is very critical. And
break the language down for us.
What I say audit of your expenditure means that you need to put pen to paper, write every expenditure you make for a given month. Then you will find that there are some expenditures that you are making that are totally frivolous. I mean, you don't need them.
Like doing your hair twice a week,
Twice a week.
Or undoing your braids when you don't need to.
Having 40 shoes and turning in so many funeral clothes every week. There's a funeral.
You guys do lots of BS too, so please focus on that as well.
Okay, beer, yes. Cut down on beer. You have to. All those things are frivolous expenditure. And of course, if you are living in a house that you have to pay rent, that is about 30–40% of your income. Then it means you have to redefine your location.
That's right.
Yeah, it means that you are living above your means. So you see, the issue is not your present situation. Your future prospect is what is key to you. Okay. Most often in Africa and for Ghanaians, we want to lavish ourselves with all the goodies for now. But they will only last to the extent that we have a future investment to support that kind of lifestyle. Okay. If you're not investing, you're in big trouble. Okay. We mentioned some other, you know, we've been talking a lot about investing. Yeah.
I just want the rule of thumb because we're about to end the program, and I want something that would really remind viewers of how to actually set out to invest wisely and make some earnings of their little salaries.
Let me try and summarize. Okay. Track your income and expenditure. Yeah. Track it. Prepare a budget. Okay. Okay. Get out of debt. And then invest.
That's a whole topic on its own.
Pay yourself first. Okay. Pay yourself first.
So if I make 100 Ghana cedis, I should decide to put away 5 cedis for me at the end of the month.
If you decide.
At best.
10% is
10%.
Put 10 cedis aside.
That's a lot.
Try.
Okay.
The money is not going to waste. It's yours for consumption in the future at a later time, right? And then monitor your investments. I think with these 5, you should be fine. Okay. But this is like, you see from the text messages you read, people already know and they've heard about this. We do a lot of talking, but it's like the parable of the sower. Right?
Take action.
Exactly. If you start today,
okay,
that's what we really need.
Okay, so remind us of the key motivating factor why we should invest.
The key motivating factor why you should invest is that you would want to make a better future for yourself. And that's why I keep in all the investment literature, when you read, they will tell you, define, like my colleague has said, I've read a lot, I've seen a lot. By my experience, I'm telling everybody here is that the first thing you need to do is to commit yourself that you will invest at all costs. Okay. I mean, that is the prima facie case you must establish for your life. Okay. That I will have to invest, and I will invest at all costs. Then the rest follow. If you don't make the decision, you realize that you know all the literature. If you call some of our callers, they probably could cite about 20 or 10 or 15 points you need to follow through logically to invest.
Thank you.
But once the commitment is not there, you have the knowledge, but you need to apply it.
Okay. Another key factor why I should invest?
Well, you simply want a better life. Yeah. Right? You don't want to stay on one level of income forever. You just want a better life. Right. And if your salary can't give you that, you must save and let the money work for you, so you just can have a better life in the future. Okay.
And Nanose shares with us. He says, hello, good evening. I have a dream of becoming a stock market guru, and I will thank you for this topic. My question on GSE, can you give me a best portfolio I can manage? Interesting, Franco. Nanose says he wants to know He wants you to give him a portfolio that he can manage. As an aspiring stock market guru,
I think
maybe
he should come to the office and then we can
we'll
talk.
yeah.
Absolutely. Good for you, Nana. Good for you.